Happy Friday, everybody. I hope you had a great week. As long as you didn't watch the market too much, you may have. Unless you're looking to buy, but we'll get into that in a minute. And then again, next week, we'll talk about that. Today is June 17th, 2022, and this is your Friday planning video. This is a busy next couple of days. Sunday is Father's Day. Happy Father's Day to my father, my father-in-law, as well as all the fathers out there. Sunday is also June 19th, Juneteenth, the holiday honoring the emancipation of enslaved people in the United States. It will be celebrated across this land in many ways, and the markets will be closed in observance of this holiday on Monday. So Monday's market update will be on Tuesday morning. There's a lot to unpack on this week, so please check this out. Feel free to share it with others. I want to talk about a few things today. It will bleed a little bit into the market, but that's what I do. So the planning for the Planning Friday will be about the finance of it. So recall that last week the S&P 500 was down over 5% on the week. Overall, there's no sugarcoating it. The S&P 500 is down 12% in the past 7 market sessions. I want to remind you about the fact that although this kind of market action is painful, it is not new. For anyone just getting into the market, it may seem new, but as I mentioned to you over the past 2 years, we seem to have a very short memory about bad times in the market. I've spoken to a lot of people in the past few months, and many of you expressed feelings about the markets, how there are often feelings of sadness and lack of confidence in the market coming back. The last time we had a market down 20% or more, something that happens every 6 years on average, something many of you have told me recently we have not seen in a while. Well, the last time was March 2020, just 2 years ago. Not so long, but removed from many people's short-term memory. I think we all know the danger in it's different this time, but it is notable that it had been over 100 years since we faced a global pandemic. So the fact that from the market bottom on March 23rd, 2020, the S&P 500 doubled in record time, about 3 times the record time. In fact, the S&P 500 doubled from the market bottom in 2020 in 354 days. Average for that time, since World War II, was 1,000 days. I can tell you, I do not think we're set to make that speed of recovery this time, but I do think that when certain events happen, and I'll mention that in a little bit, we will see some big and some quick moves. Let's go over just a few statistics. As I mentioned, a 20% decline in the market happens about every 6 years. So we're getting more than our fair share. I will add to this fact that from 1980 to 2018, there was at least some drawdown or decline in the market during the trading year. Sometimes as little as 3%, sometimes as large as 47%. But in all but 9 of those years, the stock market ended up. Yes, positive for that year. I'm not forecasting for this year, not yet at least, but I do want to add one more fact set for you. In the 20 years ending December 31st, 2021, a $1,000 investment in the S&P 500, excluding dividends, was worth nearly $3,800, $3,970 to be exact. That's if you stayed invested that whole time. If you missed just the 10 best days in the market, that $3,800 value would have been only $2,108, 44% lower. If you missed the 40 best days over the full 20 years, just 40 days, your value at the end was $1,005. Yes, 73% missed value. So I have to ask, does staying in the market work? It has in the past. As we know, past performance is no guarantee to future returns. More importantly, your needs and your goals will always drive your plans, and we have to invest and how we invest. If you're taking income, we should have more cash on hand. If you're 30 years from retirement, we should maintain a long-term outlook. Now, that long-term outlook does not mean do nothing necessarily, but it should play into what we do and don't do. I cannot stand looking at my inbox, and I don't know about you, but I cannot stand looking at my inbox in my personal email anymore, but it does allow for some good storytelling. So I imagine I'm not the only one who has an email box full of sales emails from pretty much every retailer known to man and then some. For those shoppers out there, I imagine you may even look at some of those emails. You may also look at the ads for sales on Facebook or Instagram or any other website you go to that pops up a sale. I spent a few days at the University of Chicago Booth School of Business earlier this week at a conference, and they even tried to entice us to the 10% off at the bookstore. So there are sales all around. To keep this specific, the Oxford Dictionary defines a sale as a period during which a retailer sells goods at reduced prices. Reduced prices. I'm sure you would agree we have those. Not at the gas station and not at the grocery store, but yes, and yes, at most clothing retailers. I mentioned on Monday, watch for the clearance at Target and Walmart. They're moving that merchandise, remember. We're also seeing reduced prices in the stock markets. We know that. We must evaluate if 20% off sale will turn into a clearance sale, but that's one we can talk about one-on-one. And as I've told you before, history shows that at times like this, it's been a good time to invest. History. So before compliance cuts me off, this has to be looked at in today's world with today's facts. But the hundreds of years of history are still there. We must decide if it's different this time, and if so, how does the difference change things going forward? Just to wrap things up as a down market playbook, keep in mind that this is not the first drawdown in the market. And from last week's video, we can use this market to harvest losses for tax purposes. We can do Roth conversions at this time if it's right for you. For now, let's hope the down market playbook can go back up on the shelf soon, but as long as it's out, let's keep talking about how to make the best of things. Keep in touch, please. Let's talk about what are the proper moves to do at this time. Happy Father's Day, happy Juneteenth, and we'll be back on Tuesday with the market update. Have a great weekend.